Elon Musk, the CEO and co-founder of Tesla, believes that the global economic downturn could last for another 18 months. Hey people, welcome back to our channel. In today's video, we'll be looking into Musk's thoughts and predictions of the upcoming recession. But before we start, make sure to subscribe to our channel, turn on the notifications, and most importantly, watch the video till the end. Let's get started. The world's richest man, an electric car boss, suggested that the recession would last till spring of 24 in a conversation on Twitter early on Friday morning, Eastern Time. The comments were made in response to a tweet from Billy Marcus, a co-creator of Dogecoin, who goes by the online alias Shibetoshi Nakamoto, who stated that the current coronavirus rates are actually pretty low. I suppose the only things we need to be concerned about right now are the approaching global recession and nuclear apocalypse. Musk responded, "It sure would be lovely to have a year without a terrible worldwide tragedy." When asked how long he believed the recession would persist by Tesla owners Silicon Valley, a Twitter account with over 600,000 followers, Musk responded, "Just guessing, but probably till spring of 24. The International Monetary Fund projects that the global GDP would slow to 3.2% this year and 2.7% in 2023 from its 2021 rate growth of 6%. With the exception of the 2008 financial crisis and the temporary decline during the early stages of the COVID epidemic, that would represent the slowest rate of growth since 2001. The US GDP is expected to rise by just 0.2% this year and 1.2% in 2023, according to the Federal Reserve. Musk is the newest business mogul to voice concerns about the state of the economy. Jeff Bezos, the founder of Amazon, warned in a tweet on Wednesday that it is time to batten down the hatches in anticipation of choppy economic conditions. That tweet was sent along with a video of Goldman Sachs CEO David Solomon saying in an interview with CNBC that he believes there is a good likelihood that the United States will experience a recession. Jamie Dimon, the CEO of JP Morgan Chase, has also issued warnings about impending economic turmoil. In addition, Musk's remark came after Tesla stock had a difficult week after the automaker missed revenue projections and issued a warning about a likely delivery shortage this year. Musk voiced greater optimism for the American economy than for other economies on the analyst call. He also mentioned how the economy is being impacted by rising interest rates. He declared the United States actually is North America's in very good condition. A little portion of that is pushing interest rates up more than they ought to be, but I anticipate that they'll soon discover this and bring them back down. However, he claimed that while Europe had a recession of sorts driven by energy, China is experiencing quite a burst of a recession of sorts brought on by the real estate market. Elon Musk, CEO of Tesla and SpaceX, believes that the current recession may be the longest since the world financial crisis more than 10 years ago. The richest and most successful businessman in the world said on Thursday when asked how long an economic downturn would last, probably until spring of 24. This would put the United States' gross domestic product on track to contract for a period longer than the global financial crisis, 18-month recession, which lasted from December 2007 to June 2009. While painful, Musk claimed that these episodes are necessary to rid the market of alleged malinvestments, which in turn shakes out weak company concepts. During economic booms, the subpar investments slowly accumulate as capital chases greater marginal profits until the incremental gains are no longer worth the risk. The cost of money, which is determined by policymakers at the world's central banks, is a significant factor taken into account by investors. The US Federal Reserve, the world's largest central bank, had its foot on the gas pedal until recently, trying to delay the regular economic cycle downturn. According to the National Bureau of Economic Research, the government organization that determines the official start and end dates of a recession, the US economy has shrunk only once since June 2009, for 2 brief months. Since the global financial crisis, officials have given the economy an unprecedented amount of stimulus to avoid a recession. This stimulus has taken the shape of trillions of dollars in newly produced money, as well as fiscal actions like corporate tax cuts and pandemic checks. Investors who took their assets out of the bank and invested them in new firms like Theranos and Nikola Corp, or those with groundbreaking concepts like Celsius and Juicero, have benefited from the availability of cheap money. These same enterprises always suffer as the supply of cheap money declines. Although modern monetary theory, which was formerly popular in some quarters, did attempt to suggest there was such a thing as a free lunch, non-inflationary economic growth is mostly a consequence of productivity and cannot be attained by continued money printing. When the bill finally becomes due, a wave of bankruptcies occurs as the weak managers run out of financiers ready to support their business ideas. Companies that shouldn't exist cease to exist during recessions, according to Musk. Experts predict that moment is now. The Federal Reserve has suddenly been forced into an unexpected reversal to cool down an overheating economy after providing markets with a banquet of unending cheap money. Douglas Diamond, the most recent recipient of the Nobel Prize in Economics, warned Fortune less than a week ago that the U.S. Central Bank had kept rates too low for too long and was now at risk of a crash. The central bank increased interest rates by 3 full percentage points just this year, which had a significant impact on the pricing of all kinds of assets, including equities, homes, and cryptocurrencies. When policymakers realized that inflation was running at 8% at the beginning of March, the Fed was still growing its balance sheet and consequently the money supply. Recently, Elon Musk voiced his disgust for the Fed, joining Wharton finance professor Jeremy Siegel in criticizing Fed members for having committed the worst error in the organization's 110-year history. Musk said, "Siegel is obviously right." Ironically, Musk's own company is one among many that might not have survived. At the height of the stock market bubble, the CEO acknowledged that Tesla was about a month away from going bankrupt. Without the Fed's decade-long period of ultra-low interest rates and monetary support, the main benefactor of the 2020 epidemic rally could not have survived. Musk is by no means the first to forecast that the economy will enter a recession as the nation battles rising inflation and a lack of supplies from across the world. Large bank executives have recently expressed concern that the Federal Reserve's 3 rounds of interest rate increases intended to slow increasing inflation may also be undermining economic growth by excessively moderating demand. David Solomon, CEO of Goldman Sachs, stated on CNBC on Tuesday that there's a good probability the U.S. could experience a recession and that it could be a very terrible economic scenario. Jamie Dimon, the CEO of JP Morgan Chase, added this week that he thinks it's probable that the nation will experience a worse than mild recession over the next 6 to 9 months, 8.2%. According to a Department of Labor report released last week, consumer prices grew by that amount over the course of the last year, ending in September, slowing down for the 3rd consecutive month, but still coming in 0.1 percentage points higher than economists had projected. Gas prices are declining, but other costs like rent and medical expenses are rising. As a result, overall prices are up 0.4% from August. The billionaire's announcement comes at a time when Americans' paycheck are being eaten away by persistently high inflation that hasn't been witnessed in decades. Even with the Federal Reserve's effort to raise interest rates, utilities, grocery costs, and housing have all increased in price. Nearly half a dozen rate increases have taken place this year, and more are expected in the upcoming months. These price increases, intended to slow down the economy and reduce American spending, have raised worries about a coming recession. According to a recent Wall Street Journal survey, 63% of economists think a recession will happen within the next 12 months. IMF warned that for many people, 2023 will feel like a recession, as it revised its 2023 economic growth prediction downward to 2.7% growth. The Biden administration, though, has stuck to its line that a recession is not a given. On Sunday, Pete Buttigieg, the Secretary of Transportation, stated as much, adding that it's feasible but not inevitable. With that, the video has come to an end. Let us know what you think in the comments section to help us expand our community and attract more people who share our interests and are eager to learn. Please hit the like button and subscribe if you thought the video was interesting. Till then, bye.